All right, 3 minutes to the opening bell. I see red on the screen. Dow's off 120, NASDAQ down 130. Mark Mahaney with us this morning. I want to start with DoorDash. It's currently at, what, 195, 194, and you think it's going to 360. Now, that's a big jump. Justify it, young man.
Yeah, and thanks for the adjective. Let's see. The stock traded off this week because it's going through an investment cycle. The question you have to ask yourself as an investor is that a defensive or an offensive move? They acquired this company called Deliveroo, which is kind of the DoorDash of Europe, and they're going to have to spend some time boosting marketing operations and trying to improve that asset. So, that is going to weigh on their fundamentals near term, but long term, I think this is the global leader in delivery, not just of restaurants, but of groceries, retail, specialty retail. And I think with this acquisition, they're going to kind of further establish themselves in that position. In the meantime, the core business continues to get more profitable, generating more cash flow. So you get these dislocations when companies go into investment cycles. The biggest trade-offs I've seen this quarter is companies entering investment cycles. But if they are the leader in the space and they're leading for, they're investing for offensive reasons, I like to stick with those stocks. So I like DoorDash here.
DoorDash, world delivery leader. That's quite a statement. All right, Mark, move on to Uber. I know you're bullish on that as well. It's $91 a share now. Are you sticking with $150 as your price target?
Yeah, I am. Now, the big unlock here, Stu, has to be more of these AV or autonomous vehicle deals. So what took the stock, when you and I started talking about this, beginning of the year, was at 60. And what took it from 60 to 90 was the success they had with Waymo, that robo-taxi company. The next step, the next move up in the stock has got to be more partnerships with other robo-taxi companies. There's about a half dozen of these around the world, some based in the U.S., some in Europe, some in China, and you're going to see Uber roll out more partnerships with them. In the meantime, the growth there actually accelerated, and the profits also continue to ramp up. Free cash flow is rising. They're going to do about $8-9 billion in free cash flow this year. They're buying back stock. So I think this is a nice, healthy asset with a debate on it as to whether they are going to be a robo-taxi winner or a loser. I think they're going to be a winner because they are the largest demand platform. So I want to be long Uber, and I want to stick with it.
I hope you're right, Mark, because on your recommendation, I bought some of that stock a few months ago. I've done well, but I'd like to do better. Mark, we'll see you again soon.
Okay.
Have a great weekend.
Have a great weekend, Stu.
Sure thing.